Welcome to Trading Lounge in the ASX 200, and just on the 4-hour chart here, we're looking at we're looking for a top here to make these labelings, and then we're looking for an A and a B and a C. Now we're looking at a wave 4 here, so we know wave 4s can get a bit complicated. There's 12 different types of corrections. We could end up with something simple, we could end up with something complex, but you never really know until, much later in the correction of sort of what you actually have. And when you're sort of a third of the way through and a half the way through, you're sort of looking at all these different types of patterns that can occur. And then you're looking in other markets as well to see what they're doing, because, the S&P or the UK, is going to affect to some degree what's going to occur. However, as you know, I like to look towards CBA, because CBA's, ASX 200 is weighted quite strongly to the financial section, and then within the financial section, CBA is weighted the largest. So it's always a good sort of reference point to look at. So when I'm looking at this particular pattern here, I'm looking at it as an A and a B and a C wave here, and that's quite possible, but there are other variations, so it may not be as simplistic as I'm seeing it here. There can be some slight variations on that, and one of the first ones, which I think is correct because it lines up with CBA, and that's why I need to point it out, is having the A wave here. So this would be down here in 5 waves for an A wave, back for a B, and down for a C wave here. And then we go up for the B wave. That could just be the B wave where it is here, but CBA is not telling me the same thing. So it's really looking a little bit like this here, where we have, this is the A wave here, this is a B wave here, this is a C wave here for the B wave, and then down for the C wave here. So I think that that's sort of where we are in this scenario here, because if I just take this to the hourly chart next, and then we'll also have a look at CBA. So just to go over that a little bit further, I'm looking at this is down for A here in 5 waves, then as an A wave, then a B wave and a C wave here just for the A wave, then the A wave up here, then the B wave here, and then the C wave here, and then down. Now I'm not totally, I can't pin it down exactly, but what we can do is understand where the market is, what it's working with, what price it's working with, and then it will obviously breach certain smaller patterns, which will lead us into the other patterns. But the reason I've come to this conclusion here is because of CBA. So CBA on the 15-minute chart here, and in this case here, just really taking it from the top up there. Don't worry about that number 1, that may not be right either, but we're looking at this as another simple ABC, as an A wave here, and a B wave over here, and then a C wave down here. So it's kind of panning out sort of okay. This is what we'd been sort of following. I was looking for a rally. It didn't really reach the 50 or the 61.8%. So I'm just really calling it in here as the A wave here and the B wave here, and then looking for this just to continue up here. Now I know that the S&P hasn't closed strongly and it's a bit softer, but I think let's just see how it goes. While this market here is above this level here, even if it moves down and bounces off it, then we still need to treat it that it's in bouncing mode and in B wave mode as well, that it can move higher. Only if it came under this here, then we would have to look at a more serious sort of bear picture with this at this particular time. So yeah, it's a little bit sort of tricky, but this is where we were. We've got from the A wave here down to the B wave here, we've got 5 waves here, basically it's a 3-wave structure here into the 61.8%, that little box here that we were looking for. So we've met our target here. Now we need to look for 5 waves to the upside. How far will it go? I don't know, but what we do need to do is just, as it sort of starts, we need to track wave 1, wave 2, wave 3, wave 4, and wave 5, and then we can look to short it from that point, But yeah, so I don't know how it's going to pan out. That's the bottom line. So coming back into this space here, if I go to, I'm not sure what I've done on the 15-minute chart, or the 15-minute chart's any good to us. I might just go to the tick chart because it just shows a little bit more detail in here. 100 ticks, it kind of helps clean it up a little bit, much nicer, isn't it? So, you know, in that move coming down here, like CBA did here, this move coming down in CBA here, we can see here that we've got an A wave here, an A and a B and a C here for the B wave, and then down for the C wave. So we do have a 3-wave structure here, but we do need to see this move up from here. If it moves down from here, then it will start creating a 5-wave structure, and I would be wrong at that point. So yeah, we need to see it lift. If we see that it's going to lift, then we should be able to well, you know, let's just look for 5-9 first. We need to count the waves that move up here, but I don't see it moving up here because of the US markets are not strong. But our markets can do their own thing as well. So let's just see how we go. You wouldn't really want to short this unless the 5-8 became the retested resistance here. It would only be choppy through these numbers here anyway, so you need to be very careful about 10, 20 and 30. If 30 becomes a really nice support here, then that's part of group 1, isn't it? This is 5, 8, and then we've got 10, 20 and 30 here that make up group 1, and if we can get a nice solid support on that, then we can start looking to the upside. Now, in looking to the upside, there's the levels that you need to work through. But this here would be a bit of a sticking point here. It's where the most volume turned over as well, which is the 50-60% retracement level. However, if I've got this right here, well, then we should be seeing, also can't draw, we should be seeing a move back up, you know, past the 61.8% mark here. We should be seeing it up into this space here. So, yeah, look, I'm sorry, I can't pin it down. If it was just a 5-wave structure, I know where we are within all of that and so on. There's just too many options in this particular corrective pattern that I can't pin down. Yeah, I mean, our main point with all of this is for it to finish, and we can pick up the bullish market and move in, you know, to more stock, basically. You know, even, you know, if we look at the, just for a moment here, if we look at the US side of things, I mean, one of the main points here is this is the NASDAQ here on a daily chart. So the NASDAQ has been, you know, moving quite nicely to the upside. Obviously, we can see it slowing down a little bit here, but it may just have a correction, then another little move up based from this one here in terms of 1 and 2 here, and then 3 here and 4 here and 5 here. So this is the one that's moving the most. The S&P is kind of following it to the upside here. This is the S&P here. So we were looking at being this the top of the A wave 3 here, and then an A wave here, a B wave up here, and then a C wave down here. But I'm not totally sold on that either. It also could be an A, B, C here, then 1 and 2, and then 3 here, then 4 here, and then 5. So another move up to 24.20. Like the NASDAQ, and then down from this point. Now, most of the other indices are sort of much lower and in sort of weaker situations, but they're there. The other important thing about these two is the banking sector. So when we look at JPM, so Morgans and Citis and so on, I've gone over this before. I mean, it is kind of important to understand, but basically, in a nutshell, up for 1, back for 2, and then this is all of the third wave up here. There's 5 waves in this for third wave, so we're looking for a 4th wave here. And with all the US banks, we've got 1, 2, 3, 4, 5 here. So then we would be looking for a little ABC in here, like this here. And this is why I like this our CBA and the count that I just explained on the XJO, because in this B wave here, we'd still need one more leg up here as well, you know. And because we've got this 5 waves down here, that means that once this is finished, we'll get another 5 waves here to finish that correction. So I know in the US banking sector they haven't finished, and this will be the same for Goldman's as well. So it's a slightly different scenario for Goldman's, but it's still got the 1, 2, 3, 4, 5 down, and then looking for an A and a B and a C back up here, and then another 5 down to finish that correction. So that's there too, and the same with cities as well. Slightly different with cities, but it's still got the 5 waves down here. It's a bit more mature, and it's A and it's B and it's C here, so it may come up here higher, but we're still looking for that to finish as well. So and all the other sort of financial institutions as well, BBT here, the same thing as well, 1, 2, 3, 4, 5 here. So we're looking for an A and a B and a C to come up, then another 5. So it does fit in quite nicely with what we're doing for our market. So I'll just come back to the XJO here on this chart here, so we can see. So in our charts, a little bit different here. We've got the 5 waves down here, and then we've got the A wave, the B wave, and the C wave for the XJO, and then another 5 waves down to coming into this wave 4 of 1 lesser degree here. So yeah, we're just sort of halfway through it. So I think that we're on the right track. I just can't say why we would have that rally here today. So, but I also know that we can't short into this particular number here, because it will only show a lot of support and bounce here. So we're still in a rock and a hard place with all of this, really. So let's just be a little bit patient until we can sort of work through it. Any move up here to the upside, you definitely want the 830 as a tested support, or take that out high here. Secondly, you'll run into the 50 here, which will give you a corrective pattern here, and then the other corrective pattern, which would be stronger, would be up into this space here, but should move through that higher. That's what I'm thinking. I've got no reason to see that drive up there like that, because the S&P is in the red, but that's what should occur, and if it does go down to the downside here, it's only going to bounce off the 5-8 here, so be careful about getting trapped in here. If the 5-8-20 becomes the retested resistance, sure, you can get a small position in there that's not going to bother you, and then have a look to add to it under here if that becomes the resistance here, and then you'll be on the right side at the right time, doing all the right steps here. But even if it does move through here, it's going to come back anyway. It's going to come back and test it again. And the reason for that is because if CBA drops into the 80 level here, it's going to bounce back from that point anyway. So it's a bit of a trap going short, even though we're feeling bearish at this point in time. All right, I'll leave it at that. Cheers.